European markets have had a good day so far, with the FTSE 100, for example, breaking to a new record high. But can we now see the other major indices also join the rally? Let's start off by looking at the German DAX index. It looks like Germany's DAX index is finally coming out of consolidation following a lengthy hold above the 200-day moving average and prior resistance, which now turned into support, this white line that had kept the index under pressure for much of last year. But we finally broke through that level at the start of this year, and we came back down to retest that zone. I have been monitoring price action to see what the German DAX index does here, but the fact that it held here following this rally, that's when I turned bullish on the index again. And since then, we've gone into another bit of consolidation here. But yesterday, we formed another bullish candle off of the high of that engulfing candle that was created here. And that in turn has triggered fresh buying momentum above it today. And today we are breaking higher, taking out resistance at this level right here at 25,200, which was the base of the previous breakdown. So it looks like the index is heading to a new record high above the one hit earlier this year at 25,512. Above that, you could target the Fibonacci extension levels shown on the chart over here. Here's a daily chart of the Dow Jones, and we had this level or area of resistance on the index for quite a while. At the start of this year, we saw the index hit a record high, and then it kind of started there, unable to break through, until a couple of Fridays ago when we saw a big bullish engulfing candle. Following that breakout, we were monitoring price action around this yellow line again. The idea was that the index would come back down, retest it, and we'd bounce from there. But what happened instead is we dipped a little bit deeper into the prior support range, which is not always a great sign, to be honest. But nevertheless, it looks like the bulls have prevailed and the index has now broken back above that level, which is very important. So it looks like the rally on the Dow has potentially resumed here. So watch out for further gains, but it's important that the index finishes the day holding above that 49,600 level, which is very important, as I mentioned. So much has been said about the AI bubble bursting and so on. We haven't seen a major sell-off in the Nasdaq 100 chart, as you can see. Instead, it looks like the index has held its own above some of the key support levels that had previously triggered sharp rallies, for example, around this area of 24,400 to 500 area. You can see that this level has been very important in the past, and each time we have tested it, we've seen a sharp rebound. And yet again, we saw a big rally from here a couple of weeks ago, forming this bullish engulfing candle. And since then, we haven't really seen much else. We did see a little bit to the upside, but that momentum quickly faded. We then sold off, but didn't take out the low of that candle. So instead, we held that key support. And so it looks like the Nasdaq 2 is looking quite bullish here, and I wouldn't be surprised if we were to see a breakout above this resistance trend, and if that happens, then we could well see some follow-up technical buying above it. Key resistance to watch is this level right here, which is being tested at the moment at 25,600. This level marks the low of this candle, which was taken out on this particular day, last Thursday. So if this level were to be reclaimed on a daily closing basis, I think that would be another positive sign. Key support, in so far as the short term is concerned, is the high from the previous day at 24,900-ish. That level needs to hold now to sustain the bullish move that we've seen so far into today's session. For more market updates and insights, head over to City Index, and I will see you in the next one. Take care.